Welcome back, guys. In this video, we're going into example number 2 of analyzing some properties. Now, what I did here is I still used realtor.com to go find homes for sale and homes for rent and kind of get an idea. But in this case, I actually left the state of Utah, which is where I'm based, and I went over to St. Louis, Missouri. In a lot of areas, real estate is just not as expensive, but market rents can actually be pretty decent. So I have a client that has a number of properties in St. Louis, Missouri. So I just decided to zoom over there and see what I could find. And I just kind of found comparable homes in comparable neighborhoods. And this is what I found. So I'm looking out east in some of the suburbs of St. Louis. And there's a lot of homes for sale right now, actually, quite a few. So what I did is I found one home. This one is for sale. Nice little home, about 2,000 square feet, 3-bedroom, 2.5 bath. Cute little home. And then I found in a similar area, I found this home, okay, 2,100 square feet, 3-bedroom, 3-bath, going for $3,200 a month. That also looks like a very nice home. Looks like a nice neighborhood. It's a comparable area. So let's run the numbers on these and see what happens. Again, we're going to take 5 minutes. And we're going to run some really basic numbers to see if this is even worth exploring or if this is something we want to do. All right. So property purchase price, $389,900. And for that one that was for sale, the comparable property that is for rent right now is going for $3,200. Okay, not bad. So upfront costs, I'm only putting down 20%, which is $78,000, plus maybe some closing costs. Again, repair, renovation, the homes look pretty decent. So I'm guessing $5,000. They're nothing crazy. I'm going to factor in my occupancy rate of 85%. So I have those 3 to 6 months worth of reserves. I'm going to guess 6 months worth of reserves to cover all my expenses. So that's $11,334. So $11,000, $12,000 is probably safe to have in reserves. Okay. Here are my ongoing monthly costs. So I ran the mortgage calculator. My monthly principal and interest payment would be $1,490 a month, $1,490. Homeowners insurance, I pegged it $100 again, property tax $150, and property management at $149. So here are how the numbers shake out. Total monthly income, $3,200. Total monthly expenses, $1,889, which means there's a net monthly cash flow of $1,311. That's pretty good. So if we annualize that, right, times it by 12, we get an annual net cash flow of $15,732. Our total upfront costs were the down payment, 20%, the renovation costs. So that totals $83,000. So we take our net annual cash flow, divide by our upfront cost, we get our annual cash on cash return of 19%. So that is a massive difference, right? The other one was not even 1% cash on cash. This one is 19%. So as I'm thinking here, I say, okay, Missouri's another state. I haven't even been to St. Louis. I think I've been to the airport. I don't know these areas as well, right? And maybe I'm not comfortable buying a home that I've never seen in an area that I've never been to. This is where you can do some quick analysis and say, hey, the numbers look really, really good though. 19% cash on cash is pretty solid, right? Maybe the appreciation is not as much. The house in Lehigh is probably going to appreciate faster. There's not enough homes to support all the people. There's a lot of demand. And so even though that one did not have good cash flow, maybe the appreciation, right? It's growing that way. Again, we don't really want to focus on appreciation and neglect cash flow. We want cash flow first. This one has solid cash flow. Maybe it's not going to appreciate as rapidly, but the cash flow is solid, and that's what we are focusing on. So to me, this means, okay, this merits a deeper look. So you can start making connections. You can reach out to realtors in the area. You can reach out and find real estate investors in the area. You can start building a network and say, hey, St. Louis, Missouri might be a place I want to be. I mean, there could be a lot of other places, who knows? But you make the connections and then you can start to put a plan together and say, hey, actually, I found an investor that does fix and flips and they wholesale homes. And they have this whole inventory of wholesaled homes and they've done the analysis on what rents could be. And so I'm going to go to them and maybe I can start buying their turnkey homes for buy and hold. And they've worked out the numbers for me, right? A lot of realtors do real estate investment. And so you can start making connections, maybe fly out there and check it out, right? Meet people. And hey, if it works out, $15,000 plus of cash flow per year, almost nearly a 20% annual return. You've got your money back in 5 years. And after that, everything's gravy. Everything is just pure cash flow. So I hope those two examples help you understand what numbers you can do this analysis really quickly and decide, should I take a deeper look at this, right? Should I get more concrete numbers? And should I start networking and finding the right people in those areas to make this deal happen? Finding the right property management, because I'm not going to manage a property in another state. So I'll outsource that. I can find a realtor that can give me a good recommendation on that. I can find real estate investors. And if it makes sense, if the numbers make sense on a really quick glance, then you know where you need to target your focus, right? You know what the next steps are to go deeper and see if this is something you want to do. Okay. The last thing I'll say on this is there are a lot of real estate groups all over the country, right? Bigger Pockets is one of the most well-known resources on real estate investment. They have a podcast, website, tons of articles, but they have groups, people that are into real estate investing. Go there, they talk, you can do meetups, and you can just start building those connections. And you might find an area in a place you've never thought of that is actually fantastic for real estate investment, and build the relationships and start investing there. Okay, nothing is stopping you except, maybe limiting beliefs. So I've seen clients do this very successfully, very happy, and it works. So I've seen it firsthand. Anyway, those kind of break down the examples of how to analyze a property, what you're looking for to see if it merits a further look. All right, see you guys in the next video.
Keep learning, keep building wealth.